Are you looking for ways to create a steady stream of income from your investments? Well, you've come to the right place. Today, we're setting our sights on the vibrant world of high-yield income stocks. Our journey will take us through the landscapes of three diverse sectors: mortgage real estate, energy infrastructure, and business development. The stars of our show: AGNC Investment, TC Energy, and PennantPark Floating Rate Capital. These high-yield income stocks could potentially provide you with a neat monthly dividend income of $100. But before we proceed, let's take a moment to understand what a high-yield income stock is. Quite simply, it's a stock that handsomely rewards its investors through dividends. These stocks typically belong to well-established companies with a steady cash flow, and they share a portion of their earnings with their shareholders in the form of dividends. The allure of high-yield income stocks lies in their potential to provide a regular income stream. They serve as a great tool for diversifying your income portfolio, reducing the reliance on a single source of income. Now, let's take a quick sneak peek into our trio. AGNC Investment, a mortgage real estate investment trust, boasts a yield of over 14%. Then we have TC Energy, an energy infrastructure titan from Canada, offering a yield of over 7%. And finally, PennantPark Floating Rate Capital, a business development company, with an impressive yield of over 11%. Each of these stocks has its unique strengths and challenges, shaped by the dynamics of their respective sectors. AGNC Investment navigates the turbulence of the mortgage REIT environment, while TC Energy thrives amidst the fluctuations of oil and gas prices. PennantPark Floating Rate Capital, on the other hand, capitalizes on the yield advantage of small and mid-cap companies. Stay tuned as we dive into the details of these stocks. As we traverse through their stories, we'll uncover their strategies, their resilience, and their potential to provide you a steady flow of income. So buckle up and get ready for an exciting journey into the world of high-yield income stocks. First on the list is AGNC Investment, a mortgage real estate investment trust. This company has made a name for itself in the world of real estate investment trusts, or REITs, by focusing on mortgage-backed securities. One of the enticing aspects of AGNC Investment is its yield, which stands at a robust 14.23%. This high yield has proven attractive to income-focused investors. However, it's essential to understand the challenges that AGNC Investment is currently facing. The mortgage REIT environment isn't exactly smooth sailing at the moment. An inverted Treasury yield curve and aggressive rate hikes by the Federal Reserve have introduced some turbulence into the mix. Despite these hurdles, AGNC's management has shown an impressive ability to maintain a double-digit yield. It's a testament to their strategic prowess and commitment to delivering value for their investors. Now, let's delve a little deeper into the future prospects for AGNC Investment. There's a strong potential for improvement in AGNC's net interest margin. This is anticipated to occur when the yield curve normalizes. In simpler terms, this means when the rates on long-term bonds once again exceed the rates on short-term bonds. Additionally, higher interest rates could contribute to increased yields on the mortgage-backed securities that AGNC Investment specializes in. In essence, AGNC Investment is navigating a challenging environment with an inverted yield curve and rate hikes. However, its management team has a track record of maintaining a double-digit yield, and there are strong indications of future improvements in its net interest margin. Despite the complexities of the current landscape, AGNC's ability to weather these storms makes it an attractive option for investors. AGNC's double-digit yield, despite the challenges, makes it an attractive option for investors. This resilience, coupled with the potential for improved net interest margins in the future, makes AGNC Investment a compelling consideration for anyone looking to diversify their income portfolio. Next up, we have TC Energy, a Canadian-based energy infrastructure company. This company is known for its extensive network of pipelines that transport oil and gas across North America. When it comes to the energy sector, TC Energy is a significant player, contributing to the vital flow of these resources that keep our economies running. TC Energy isn't just about size and scope, though. It's also a high-yielding income stock, boasting a yield of over 7%. For income-focused investors, this is a number that can turn heads. But what's even more impressive is TC Energy's track record. For 23 consecutive years, this company has increased its dividends. That's a testament to both the company's financial health and its commitment to returning value to shareholders. Now, let's talk about the current landscape. Recently, we've seen a decline in oil prices. While this might seem like a challenge, it's also an opportunity. The Organization of Petroleum Exporting Countries, or OPEC, has decided to reduce production. This decision could lead to a tightening of oil supply, potentially driving up prices down the line. For a company like TC Energy, which is in the business of transporting these resources, this could translate into increased revenues and consequently, higher dividends. But remember, investing isn't without risks. The energy sector is notoriously volatile, influenced by a myriad of factors from geopolitical tensions to technological advancements. Yet, TC Energy's long-standing presence and its consistent performance speak volumes about its resilience and strategic prowess in navigating these complexities. So, what's the bottom line here? TC Energy combines the best of both worlds, a high yield and a consistent history of dividend growth. It's a company that has proven its ability to weather the storms and come out on top. And with recent developments in the oil market, there could be potential buying opportunities on the horizon for savvy investors. With a consistent history of dividend growth, TC Energy offers a stable income opportunity. So if you're looking to diversify your portfolio with a high-yielding energy stock, this might just be the ticket. Last but not least, we present PennantPark Floating Rate Capital, a business development company. PennantPark is an intriguing player in the finance industry with a unique focus on lending to small and mid-sized businesses. This niche focus leverages the yield advantage from the limited access these companies have to traditional debt markets, creating an interesting investment opportunity. PennantPark boasts an impressive yield of 11.52%. That's right, over 11%. This high yield is largely due to the company's investment strategy, which is primarily focused on debt investments. It's a strategy that has proven successful, providing investors with consistent and attractive returns over time. Now let's delve a bit deeper into PennantPark's investment focus. The company primarily invests in variable rate debt, which means the interest rate on the debt can change over time. This can be a significant advantage in a rising interest rate environment, as higher interest rates translate to higher income for PennantPark. This strategy may also provide some protection against inflation, as the income generated by these investments can potentially increase with rising prices. In addition to variable rate debt, PennantPark also focuses on first lien secured debt investments. By having the first lien on a borrower's assets, PennantPark is in a prime position to recover its investment in the event of a default. This added layer of protection is often appreciated by investors, especially those with a more conservative risk profile. In conclusion, PennantPark Floating Rate Capital offers a compelling investment opportunity. Its unique focus on small and mid-sized businesses, coupled with its strategy of investing in variable rate and first lien secured debt, make it a standout player in the finance industry. It's not just about the high yield, but also the degree of protection that PennantPark provides against potential losses. So, if you're looking for a high-yield income stock with a defensive edge, PennantPark might just be the one for you. PennantPark's strategy offers a high yield with a degree of protection against potential losses. Now that we've explored these three high-yield income stocks, what's the next step? It's time to consider an allocation strategy. If your goal is $100 monthly dividend income, a possible approach could be to allocate an investment of around $11,550 equally among these three stocks: AGNC Investment, TC Energy, and PennantPark Floating Rate Capital. This means each of these stocks would represent about a third of your investment. But why these three? Well, it's all about diversity. Each of these stocks represents a different sector. AGNC Investment is a mortgage real estate investment trust, or REIT, operating in the mortgage sector. TC Energy is an infrastructure company in the energy sector, and PennantPark Floating Rate Capital is a business development company in the middle market corporate lending sector. This diversity offers you a kind of shield, a protection against volatility in any single sector. If one sector faces challenges, the impact on your overall income could be cushioned by the performance of the other sectors. It's like not putting all your eggs in one basket. But diversity in itself is not enough. The success of this strategy also hinges on careful management and strategic positioning within each sector. Each of these stocks faces its own set of challenges. For instance, AGNC Investment is dealing with an inverted treasury yield curve and aggressive rate hikes. TC Energy is grappling with fluctuating oil prices and OPEC's production decisions. And PennantPark Floating Rate Capital is navigating the complexities of lending to small and mid-cap companies. Yet each of these stocks also has its strengths. AGNC Investment has a history of maintaining a double-digit yield. TC Energy has a track record of increasing dividends for 23 consecutive years. And PennantPark Floating Rate Capital leverages the yield advantage from the limited access its borrowers have to traditional debt markets. So, there you have it. An allocation strategy that balances diversity with strategic positioning. Remember, diversification and careful management are key to navigating the challenges within each sector. Invest wisely.